I'm currently reading out of the Reference Guide to Regulatory Compliance, the older text on paper, page 689. I am within mutual holding companies, and subpart G of that, conversion or liquidation of mutual holding companies. And I am reading number 1, conversion. A mutual holding company may convert to the stock form in accordance with Federal Reserve Board rules. And when a mutual holding company converts to a stock form, the subsidiary savings association may acquire for cash or stock another insured depository institution that is already in the stock form of ownership. C, any stock issued by a subsidiary savings association or subsidiary holding company of a mutual holding company to persons other than its parent may be exchanged for the stock issued by the parent company in connection with the conversion of the parent mutual holding company to stock form. If a subsidiary holding company or savings association has issued shares to an entity other than its parent company, the mutual holding company may not convert to stock form unless the majority of the shares issued to other entities vote in favor of the conversion. Number 2, procedural requirements under conversion or liquidation of mutual holding companies. Pre-filing is the first section. The mutual holding company's board may meet with the staff of the appropriate reserve bank or the FRB before the vote on the plan of conversion to provide the staff with a written strategic plan that outlines the objectives of the conversion. B, the mutual holding company should consult with the FRB for appropriate reserve bank before it files its application for conversion. Prior to filing, it must adopt a business plan showing the intended use for the proposed conversion proceeds. And D, the business plan must address projected operations and activities for 3 years, description of how the conversion proceeds will be deployed, and what opportunities are available to achieve the planned deployment of conversion proceeds in the relevant proposed market areas. And third, how the deployment of proceeds will provide a reasonable return on the investment. 4, 3 years of projected financial statements. 5, show how the subsidiary savings association will receive at least 50% of the net conversion proceeds. And 6, the risks associated with the plan. 7, the expertise in the mutual holding company for executing a plan. And Roman numeral 8, plan for deploying proceeds to meet credit and lending needs of the proposed market area. Letter E under the pre-filing is that the CEO must review and 2/3 of the board must approve the plan and certify that it reflects the intended plan for proceeds deployment and that the new initiatives are reasonably achievable. Pre-filing letter F, the FRB will review the plan to determine if it represents a safe and sound deployment of conversion proceeds. And G, if a plan is approved and the conversion is completed, the holding company must operate according to the plan. Number 3, plan of conversion. At least 2/3 of the board of the holding company must approve the plan of conversion. The holding company must promptly notify its members that the board has adopted a plan of conversion and that a copy is available for inspection in the holding company's home office. Letter C, the notice must include the following. Roman numeral 1 through 18. On the notice for the plan of conversion, the board adopted the plan to convert from mutual to stock form. Roman numeral 2, the members will receive a proxy statement and will have an opportunity to approve or disapprove the conversion at a meeting to vote on the conversion. 3, existing proxies may not be used for voting on a conversion plan. New proxies must be submitted. Roman numeral 4, the FRB must approve the conversion, a favorable tax ruling, or a tax expert must issue, a tax opinion indicating the conversion is a tax-free reorganization. 6, the IRS must issue a favorable tax ruling, or a tax expert must issue a tax opinion indicating the conversion is a tax-free organization. Got it. Roman numeral 7, the FRB may not approve the conversion, and the IRS ruling or the tax expert might not issue a favorable ruling or opinion. And 8, the account holder writes an FDIC deposit insurance will remain the same, and that the Savings Association's business offices and with existing management and staff without interruptions for all depositors and borrowers. 9, borrower loans will not be affected. 10, the subsidiary savings association may continue to be an FHLB member. 11, the holding company may amend the proposed conversion before the members' meeting or terminate the proposed conversion. 12, after FRB approval, the mutual holding company will send proxy materials to members, and members may telephone or write with additional questions. 13, the proposed record date for determining the eligible shareholder entitled to receive subscription rights to purchase shares. 14, a brief description of the circumstances under which eligible account holders will receive subscription rights to purchase shares. 15, a brief description of how voting members may participate in the conversion. 16, a brief description of how directors, officers, and employees will participate with the conversion. 17, a brief description of the conversion plan. And 18, the par value, if any, and approximate number of shares that will be issued or sold in the conversion. Letter D, filing 1 through 6. 1, the application of conversion along with a copy of conversion plan must be filed with the appropriate reserve bank. 2, applications may be amended with notice to the reserve bank. Applications may be amended. And 3, the holding company must publish a notice of the conversion for the public. 4, comments on the proposed conversion may be sent to the reserve bank. 5, the FRB will review the stock appraisal for independence in valuation. 6, the FRB will review the stock appraisal for independence and will review the association's compliance record and may deny the conversion application based on the compliance record or CRA rating, or may require an amendment to the conversion plan that would improve the association's ability to meet the credit needs of its communities. E, judicial review. Any person aggrieved by the FRB's action, including the holding company, may ask the appropriate U.S. Court of Appeals to review the action. F, voting on the plan of conversion. Roman numeral 1 through 9 on this page. 1, after the conversion application is approved, the membership must vote on the plan at a meeting of members. 2, the members must approve the plan by a majority of votes, either in person or by proxy. 3, the holding company must comply with the proxy solicitation provisions when it provides proxy solicitation materials to members for the meeting to vote on the conversion plan. 4, members of the holding company must comply with proxy rules if the member solicits more than 50 people, or if it does not solicit proxies in new newspaper notices. 5, proxies must clearly indicate in boldface type that management is soliciting a proxy and must indicate all of the matters that members will vote upon and include the date and time of the meeting where the vote will be held. 6, proxies must include blank spaces where the member must date and sign. Roman numeral 7, proxies must include a description of any charter or state law requirement that restricts or conditions votes by proxy. 8, proxies must include an acknowledgement that the member received a proxy statement before he or she signed the form of proxy. 9, proxies must include a way for the member to specify approval or disapproval of the ballot, a statement that management will vote the proxy in accordance with the member's specifications, and a statement in boldface type of how management will vote if the member does not specify a choice. 10. Proxy materials may not contain false or misleading statements, nor may they omit any material facts. 11. Proxies may not be undated and must state clearly in boldface type revocable proxy. And 12. Management may not use previously executed proxies for the vote on a conversion plan. G. Offering circular 1 through 4. Under the plan of conversion, the holding company must prepare and circulate an offering circular in conformance with the Form OC. A circular must be sent to all those listed in the plan of conversion no later than 10 days after the FRB approves the conversion. 3. The holding company must condition the stock offering on members' approval of the plan of conversion. And 4. Any post-effective amendments must be circulated to each person who subscribes for or ordered shares and must indicate that each person may increase, decrease, or rescind their subscription or order for the shares. H. Offers and sales of stock. Roman numeral 1. The holding company must offer to sell the conversion shares in the following order. A. Eligible account holders. B. Tax qualified ESOPs. C. Supplemental eligible account holders. D. Other voting members who have subscription rights. And E. The community and or general public. Number 4. Offering conversion shares. The holding company may offer shares at the same time it begins proxy solicitation of members, and subject to FRB approval and compliance with SEC rules. 5. Pricing conversion shares. Conversion shares must be sold at a uniform price per share and at a total price equal to estimated pro forma market value of the shares after conversion. B. Maximum price must be no more than 15% above the midpoint of the estimated price range in the offering circular. C. Minimum price must be no more than 15% below the midpoint of the estimated price range in the offering circular. D. With FRB approval, the maximum price may be increased by up to 15%. E. The maximum price must be between $5 and $50 per share. And F. The estimated price must be included in any preliminary offering circular. 6. Selling conversion shares. The holding company must distribute order forms to all eligible account holders and other eligible voting members to enable them to subscribe for shares. B. The holding company may sell conversion shares to the public and or its community during or at the conclusion of a subscription offering. C. All subscription orders must be filled first. Number 7. Prohibited sales practices. A through E. The holding company, its officers, and directors may not employ any advice, scheme, or artifice to defraud. 2. Obtain money or property by means of any untrue statement of a material fact or any omission of a material fact. Or 3. Engage in any act, transaction, practice, or course of business that operates or would operate as a fraud or deceit upon the purchaser or seller. B. Prohibited sales practices. During the conversion, no person may transfer or enter into an agreement to transfer the legal or beneficial ownership of the subscription rights for the conversion shares to another. 2. Make any offer or announce to purchase any of the shares from anyone but the holding company. 3. Knowingly acquire more than the maximum purchase allowable under the plan of conversion. C. Under prohibited sales practices, the restrictions in B do not apply to offers of more than 10% of the shares made by an underwriter or selling group acting on behalf of the holding company that is purchasing for a public resale or by a ESOP as long as it does not own more than 25% of the shares. D. Shares may be purchased with cash or by withdrawal from a savings now account or CD in a subsidiary association. No early withdrawal penalty may be charged. The holding company or association must pay interest from the date it receives a payment until the date it completes the sale or terminates the offer. No less than the passbook rate must be given for funds received in cash, check, or money order. Interest at the current rate must be paid for withdrawals from a savings account at the association. If the depositor fails to maintain the applicable minimum balance because payment is made from a CD, the CD may be canceled and interest paid at no less than the passbook rate for any remaining balance. Letter E, under prohibited sales practices, the holding company may not finance the purchase of the shares. Number 8, all these numbers are relating to G, conversion or liquidation of mutual holding companies still. Subscription rights for eligible account holders and supplemental eligible account holders. A, the holding company must offer eligible account holders and supplemental eligible account holders subscription rights equal to the greater of 1, the maximum purchase limitation established for the community or public offering, 2, 1/10 of 1% of the total stock offering, or 3, 15 times the following, the total number of conversion shares that will be issued multiplied by the following fraction as applicable. The total qualifying deposit of the eligible account holder or supplemental account holder as applicable divided by the total qualifying deposits of all eligible account holders or all supplemental account holders as applicable. B, under subscription rights for eligible account holders and supplemental eligible account holders, is officers and directors of holding companies and their subsidiaries may be eligible account holders. However, if their rights are based on deposits that have increased during the year prior to the eligibility record date, the subscription rights based on those deposits must be subordinate to other eligible account holder subscription rights. 9, eligibility for other voting members. The holding company must give rights to purchase conversion shares, supplemental eligible account shares to other voting members who are not eligible account holders nor supplemental eligible account holders. B, the shares allocated to these voting members must be the greater of the maximum purchase limitation established for the community and public offering, or 1/10 of 1% of the total stock offering. C, the holding company must subordinate the voting members' rights to the rights of eligible account holders, tax-exempt ESOPs, and supplemental eligible account holders. 10, purchase limitations for officers, directors, and their associates. When the holding company converts, the officers, directors, and their associates may not purchase more than the following percentages. It's a table, once again, of the institution's asset sizes versus or the officer and director percentage reduces from starting at 35% to 25% for every increment in the institution size by 1% per increment. So for institutions that are 50 million or less, it's 35%. 50 million to 100 million is 34% officer and director percentage that can be purchased by officers and directors. Percentage of the stock that can be purchased by the officer or director. For an institution, 100 million to 150 million is then 33%. 150 million to 200 million is 32%. And this continues by 50 million increments, all reducing the amount of stock that can be purchased by officers and directors by 1% until you reach over 500 million, in which case it caps at 25% that can be purchased by officers and directors. These limitations do not apply to shares held in a tax-qualified stock benefits plan attributable to the officers, directors, and their associates. Oversubscription, number 11. If the shares are oversubscribed by supplemental eligible account holders, not by supplemental eligible account holders, by eligible account holders, the holding company must allocate shares so that each account holder may purchase 100 shares if possible. If the shares are oversubscribed by supplemental eligible account holders, the holding company must allocate them so that each may purchase 100 shares if applicable. C, if a person is both an eligible account holder and a supplemental eligible account holder, the holding company must include the eligible account holder's allocation in determining the number of shares the holding company may allocate to the person as a supplemental eligible account holder. D, for other allocations to eligible account holders and supplemental eligible account holders, the shares must be allocated equitably, and the holding company must describe its method of allocation. ESOP purchase of shares. Tax-qualified ESOPs may purchase up to 10% of the total offering as revised if applicable. If the ESOP does not purchase the stock, it may purchase it in the open market with FRB approval. C, the holding company may include stock contributed to a charitable organization in the conversion in the calculation of total offering for purposes of determining ESOP purchase unless the FRB objects. Purchase limitations number 13. The holding company may not limit the number of shares any person or group may purchase up to 5%. B, if the holding company limits the purchase by a person or group to 5% of the total stock sold, it may modify the limit with FRB approval to provide a limit of between 5% and 10% of the total stock offering. C, the holding company may require a minimum purchase of shares at least equaling $500 or 25 shares. And D, the setting limitation, the holding company may not aggregate in setting limitations. The holding company may not aggregate conversion shares attributed to a person in ESOP with shares purchased directly by that person. Number 14, purchase reference for persons in the local community. In the offering, the holding company may give a purchase preference to eligible account holders, supplemental eligible account holders, and voting members residing in the local community. B, in the community offering, preference must be given to natural persons residing in the community. 15, conditions on community and public offerings. A, if a community or public offering, the holding company must offer the shares to achieve a widespread distribution of the stock. B, the holding company must fill orders for the stock up to a maximum of 2% of the stock on a basis that will promote a widespread distribution of the stock. The remaining shares must be allocated on a per-order basis until all orders are filled. Number 16, deadline for completing the offer. The holding company must complete the sales of the stock within 45 days of the last day of the subscription period. B, this period may be extended with the approval of the FRB. C, if it is extended, the circular must be amended. 17, completing or terminating the conversion. A, the holding company must set a date for the completion that is not more than 24 months from the date the members approve the plan of conversion. B, once set, the date cannot be extended. The conversion must be terminated if not completed. And C, the members may terminate the conversion by failing to approve it. And D, the holding company may terminate it before the meeting of members or after the meeting with FRB approval. Number 18, stockholder rights. The resulting stockholding company must grant the stockholders exclusive voting rights. Moving on to number 19, liquidation accounts. This runs from letter A to letter I. A, the stockholding company must provide a liquidation account each eligible account holder and supplemental eligible account holder. B, a liquidation account represents the potential interests of eligible account holders and supplemental eligible account holders in the mutual holding company's net worth at the time of the conversion. C, the stockholding company must create a sub-account to reflect the interest of each account holder. D, the stockholding company must give a liquidation distribution to the eligible and supplemental eligible account holders who hold savings accounts from the time of conversion until liquidation, before any distribution to common stockholders. E, the stockholding company may not record the liquidation account in the financial statements, but must disclose it in the footnotes to the financial statements. F, the initial balance of the liquidation account is the net worth as stated in the financial statement that is included in the final offering circular. G, sub-accounts. I, all under liquidation accounts. I, under sub-accounts. The initial sub-account balance for a savings account held by an eligible account holder or eligible supplemental account holder will be determined by multiplying the initial balance of the liquidation account by the following fraction: the qualifying deposit of the account holder or supplemental account holder as applicable in the savings account on the eligibility record date divided by the total qualifying deposits of all eligible account holders or eligible supplemental account holders as applicable on that date. Roman numeral 2, under sub-accounts, if one person holds a savings account on both an eligible account date and a separate savings account on the eligible supplemental account date, the stock holding company must compute two sub-accounts. Roman numeral 3, the stock holding company may not decrease the initial sub-account balances. They must be decreased as depositors reduce or close their accounts. Roman numeral 4, no voting rights are retained based on sub-accounts. H, adjusting some sub-accounts under the liquidation accounts section. I, the stock holding company must reduce the balance in the sub-account if the deposit balance in the account holder's savings account on any annual closing date at the fiscal year end is less than the deposit balance in the account at the close of business on any other annual closing date after the relevant eligibility record date, or the qualifying deposits in the account on the eligibility record date. Roman numeral 2, if the balance in the sub-account is reduced, the holding company may not subsequently increase it if the deposit balance increases. Roman numeral 3, balances do not have to be adjusted at every closing date as long as sufficient documentation is maintained to make the computation in the case of a liquidation. Roman numeral 4, if a liquidation occurs, the holding company must provide each sub-account holder with a distribution in the amount of the account balance. Liquidation. A liquidation is the sale of the assets and the settlement of the liabilities of the holding company with the intent to cease operations. 2. Upon liquidation, the stock holding company must return the charter to the federal agency that issued it for cancellation. Roman numeral 3, a liquidation is not a merger, consolidation, or similar combination of transaction with another depository institution. And 4, in case of a transaction that is not a liquidation, the surviving holding company must assume the liquidation account. Number 20, post-conversion stock plans. Within 12 months following conversion, the stock holding company may implement a stock option plan, an ESOP, or other tax-qualified employee stock benefit plan, or a management recognition plan, provided it meets these requirements. A, the stock holding company discloses the plans in a proxy statement and offering circular. No shareholder vote is required to implement the ESOP, and the ESOP is tax qualified. B, the option plan does not exceed more than 10% of the number of shares that were issued in the conversion. The ESOP and MRP cannot hold more than 10% of the shares issued in the conversion plan. However, if the stock